Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Friday, the 29th of July. Well, just 4 more days to the deadline. I am positive that this is just an arbitrary date that some policy wonk in DC came up with to get everyone up in arms about doing something with the debt. Well, you know what? Warren Buffett has, I think, the best answer for this whole thing, and I have a lot of respect for Warren. This is what he had to say. I could end the deficit in 5 minutes. You just pass a law that says that anytime there's a deficit of more than 3% of GDP, all sitting members of Congress are ineligible for re-election. That would do it, Warren. Way to go. I totally agree with you on that. Let's hope they do something sensible. Not holding my breath on that one, though. Well, here it is, the last day of the trading week and the last day of the trading month. The equity markets are, as of this writing, sharply lower for the week and the month. And while gold and silver, well, as you know, they're higher, sharply higher for the week and the month. And as we've been indicating for weeks, we thought that the equity markets were rolling over to the downside. Technically, we're getting very close to pulling the trigger on our major monthly trade triangles, which sets the trend for the equity markets for us. Now let's take a look at what the markets are telling us and the direction they're taking us on this last trading day of the week and the month. So here we are. We're looking at the S&P 500. Weekly down, daily down. If you're a intermediate term trader, you should be out of this market right now. One of the big things we see happening here, and this is a biggie, and everybody on the floor of the New York Stock Exchange is watching this, and a lot of people around the country are watching this if they're invested in the market, is this line right here. It's a 200-day moving average. And it comes in today, we're looking at the moving averages is 1, 2, 8, 4. If we see the market close or go below this and close below this line, it's all over for the equity markets, in my opinion, because the momentum, we've got a very investors are just being very complacent with this market just going like this, really going nowhere. So this, no big problem. We'll build up momentum on the downside if we go below this 200-day moving average. Plus, if we get below the 1250 level, which is what is a major level for a lot of traders, myself included, that will also indicate that this is the major head and shoulders top we've talked about. This is the left shoulder, this is the head, and this is the right shoulder. So again, these are very, very important levels. I think if we go below the 200-day moving average, that'll kick things off. The momentum will start going on the downside, and I think we'll see this market accelerate on the downside. For the month, I think we were closed just a little bit lower in the equity market, so no one's getting too excited about it or too worried about it, but I think complacency could be the Achilles heel of this market right now. So let's go to our next market. Let's clear the screen off, and let's just go to our next market, and we're going to be looking at silver. Silver is actually, it's up for the month. It's had a good month, let me say. We're continuing to move sideways here. We've gone below the parabolic, the PSAR, the parabolic stop and reverse. So we may see a little bit more of a sideways market, but the trend is generally up. Both our weekly and monthly are positive. Our daily is the only one that's a little bit negative, 39.83. The market's currently trading 39.90. This is cash. It's real time. And but generally speaking, I think this market can still go higher, and maybe it's going to take something, other piece of news or something to bring it to go higher. But I don't see this market trending lower. It's a little bit lower for the week, but I think we could still close unchanged for the week. So let's see how that works out. Next market is the one everyone's watching. This is where it seems people putting their wealth in. We're currently trading at $1,622, $1,622.56. It's live. The market is higher for the week, and we made a new high today. And as you can see, the trend continues to pop up, pop up, pop up. Now we may see a pullback, maybe a pullback I think expect the 1580 level to be a very important level. Also, the 1600 level psychologically is going to be a very important level to hold. So again, this could be a 52-week rule, high rule on a Friday. If we're seeing this market, the gold close towards its highs. Now, the high today, we trade as high as 1632, which is a new all-time high for gold against the dollar. If we get to up, say, we close around, let's say, 3 or 4 o'clock, around the 1630 level, then I think it's an excellent opportunity to go long this market, because the market's telling you nothing's going to get done, and whatever gets done is not going to be good enough. So let's take this off the screen to our next chart, and that's going to be crude oil. Crude oil is down 75, minus 75. This is what we expected to happen. We would see a lower test of the Donchian trading channel. We're getting there, and I think we are going to see this market in an oversold condition where we are right now. We may see something like this, and we come out of the channel and pop out, but we'll eventually, I think, we'll pop back in. I think we're looking at an opportunity here, somewhere along the line here, to get long this market, but it's not there yet. We want to give it a little more room on the downside. So some great markets coming up. I see some great opportunities to make money. And let's go to our next market, and that's the dollar index. Dollar index is still negative, not much change for the month, but we're certainly down today, 73.82 currently, and we're down towards the lower end of the Donchian channel. We are a little bit oversold, and we may see a pop from here, but generally speaking, the trend is down, and we expect this to kick in. Well, the other thing is the 200-day moving average is sloping down, which means the trend is generally down. It's something you really want to pay attention to, is this 200-day moving average on a lot of these markets. A lot of very successful traders use that as a barometer of trends. So let's go to the next market, and that's going to be the CRB index. You can see the CRB index is up about 1% for the month, not a negative number, a 1% number. And here we are above the 200-day moving average. We sort of broke it momentarily there, but we popped back up. And I think this market is maybe going sideways for another week or two. And then I think that's going to be the key. One, will be oversold here, and two, we'll have an opportunity to watch some of our trade triangles kick in. When they do, I don't want to get long this market, because I think this is going to be what we've talked about before, is a potential energy field to drive this market high. The 353 level is definitely an area that you should be watching. If we go over that level, so if we close over 350 to begin with, I would say that's a very, very, very positive sign. So let's do this. We've wrapped all the markets up, but I do have a special message for you, and I want to share this with you. I think you'll really enjoy this. So let me clear the screen again, and let me give you that special message. And I think we're very excited about this here at MarketClub, and here it is. We've actually I want to introduce the one-on-one MarketClub personal training. If you want to improve your trading, and who doesn't want to improve their trading, and this is the time you want to do it, because the markets are becoming incredibly volatile. If you have a 401k program in there, or anything money you want to protect and grow, you need to have a one-on-one MarketClub personal training program made for you. These are not canned recordings. These are personal trainers that we have to help you with your trading. And I think this is what's really important. So MarketClub has teamed up with a partnership, PMI out of Salt Lake City. I was out there making some courses just for this particular partnership, and you won't see them anywhere else, and I think that's really what you want to look at. So give the number on the screen a call, 1-877-219-1482. That's 1-877-219-1482. I think you'd be surprised at just how little it costs to have a personal trainer work with you to improve your trading. I think that's very exciting news. I wish I had been someone like that when I started my career decades ago. It would have saved me a lot of time and a lot of frustration and a lot of losses. So let's focus on personal training, improve your trading, give yourself that promise, give yourself the gift of a personal trainer to help you improve your trading. So give them a call today. Just find out. There's no obligation. Just give them a call. Find out if it's right for you. And if it is, you know what to do. Hey, this is Adam Hewison for the 1 p.m. update for the 29th of July, the last trading day of the month. Let's start fresh next month. Every success.